School. Hello, everybody. Welcome back to the RationalInvestor.com's Daily Brief. It is Friday, May 3rd. Woohoo! Party! I actually kind of feel like today is like the last day of school. I was playing a fun pants optional. And actually, it's funny. Just before I started recording, I was playing an old song from my high school days that I used to love. But good morning, everybody. As I'm sure you should all be well aware, I think Brian is a little overdue for a vacation. And so today is our last day of the current level 2 program. So I'm basically going to finish today's daily brief and then head on over to and teach the last class, and it's our program review, hand out the final exams, and then Brian's going on vacation. The good part about it, I think, and of course, Alex, awesome job as our bus driver. How you doing this morning, Alex?
Hey, sir. I am pretty good. How are you?
Good. Notice Scottish salmon keeps powering to new highs.
Yeah, I'm just combing it up there.
Nice call, dude. Brilliant call. You and Rob. And by all means, I did hear recently that you Europeans would like to try and get in on that options meeting. So I don't know whether, because Zach is in Hawaii, so he's sort of the other side of the world. It's kind of tough for him to be available during European hours. But at the same time, too, I know some of our Australians who participate in that call would love to do a call at a different time. So we might think about experiment with the idea of having a second European/Asian call for that options meeting. And I know Dutch Rob, I think, Alex, you were telling me Dutch Rob was interested. So, other Europeans that are alum of this school, reach out. Maybe, Alex, you could even sort of form a little bit of a list. And I know Jeremy down in Australia, when we meet, it's like 2-3 o'clock in the morning for him. So he would prefer a different time. So maybe for the alum, we might have sort of dual sessions for the options club.
Okay. Cool.
Yeah, so I'm thinking about you guys, and I really would like to try and help and support you guys. And by all means, Zach does record those calls, so you can always watch them afterward. And it's just a question of finding where the link is. He put it, but you can always just reach out to Zach for the YouTube link. And we should probably have some sort of repository for those calls. And speaking of which, actually, a couple of those trades are just kicking butt right now. So really pleased to see. Before I get into any of that, though, we should probably introduce the man, the myth, the legend, our co-host here today, and who will probably be centerpiece of the daily briefs while I'm gone. He's got Mr. Vitalik on his screen this morning, so I guess he's getting ready to talk a little Ethereum. How you doing this morning, Thomas? Oh, he's got his microphone muted. Does he know he's muted? Maybe not.
Oops. Yeah, sorry about that. I thought you were talking about Vitalik. You said the man, the myth, the legend. I think that's what everyone considers this guy to be, but thank you. Yeah, so I do plan on quarterbacking the show, and I'm excited to take on that responsibility. And it looks like I'm going to have some help with some special guest appearances. But it's been about a year since I did that. I guess it was last summer, and we had a good time. We took requests, and we did a lot of we got a lot of different names in there that we got to analyze. So maybe we'll do something along the lines of that. But you guys are stuck with me for the next 2 weeks, it seems like.
Well, I do know that there are a couple of days that you're going to be absent, so we've asked the TRI team. I think Julian will do a couple baby powder reports there. So it should be a robust experience. It's just that I'm going to be just taking a bit of a break and maybe refreshing my brain a bit here. So just an update on all that. But anyway, good to hear that you're in good form this morning. And, I got to say, PMA for the win kind of idea. I rely heavily on the team meetings, team members here to help me. So a big thank you this morning for Alex and Thomas's and Seward's support as Brian is a little stressed out here coming into the last day of school, trying to get all the things put together so that he can at least feel a little bit secure, knowing that the ship isn't going to sink here while I'm gone. Stock wise, I'm actually quite surprised. This was one of our option club meeting ideas. And I actually got filled on my calls on this date here, eh? Isn't that crazy? Oh my goodness.
Wow.
So a little bit, feeling pretty good about that trade.
What's that option worth now? Like 7 times?
I haven't really looked at it. I do have my open orders working at sell halves on doubles, but what a day, eh? Isn't that incredible? 25% move on the stock in one day. And then also too, we had one that we were kicking around the site recently, this RUBI. This is a setup, and since setups, of course, have to have stops and all that kind of stuff, very different from options trading. I sort of scolded myself for not taking the trade on this day here. After that, I just sort of mentally decided, you know what, I'm not acting correctly with setups and I'm going on vacation. So I'm going to let this one pass. But I was exceedingly pleased to hear that some people in the lounge and on the site took this bot setup and they're feeling pretty good this morning. So congratulations there, guys. There's Alex's Scottish salmon. Holy nice trade, dude. I don't know whether you actually own any of this or not, but wow, what a move. So I guess the hyperwave continues hypering. So on balance, hopefully you see sort of the direction I'm going here. Wow, what a stock market. I was actually, to be honest with you, I'm a little surprised at the overt strength. We did have econs come out this morning, and the employment report, jobs report came in pretty strong. We actually had an outside downside key reversal on the daily charts come in, and I think if anything, we were kind of talking about, let's let the M's develop here. We've actually gapped higher on that jobs report. So let's see how the month of May goes. I suppose in this kind of crazy market, we could see a break to new highs, but with all of those options the put options bought the other day by the institutions, which I showed you. And then, you have to wonder with Julian's pin idea of 293 as an important level, whether, maybe we shouldn't get too excited about the bull until we actually break out through the top. You can actually see that they gap the market higher on that jobs report right into a reload zone. And we're just sort of sitting here. But, I have to say, the market that actually did surprise me the most, of course, is our beloved Bitcoin. Woohoo, Bitcoin. We rallied up into a mountain man level.
Save it.
Okay, you don't want to talk about that just yet? All right. If anything, I'm not quite sure why I'm going into so much detail here to start with today. What we usually do when we have Thomas here is actually let him guide the bus. So why don't I turn the steering wheel over to Thomas and you sort of guide us from here on out, because I don't know. It's weird. I get on these sort of talks and I can't shut up. It's like, okay, Brian, slow down. So if anything, that was good that you go save it, because I probably would have gone right into, and then the altcoins and blah, 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 blah. All right. So where do you want to start us today, sir?
I like the direction you were heading. I think we'll continue with the stock market conversation before we get into Bitcoin and crypto, just so that we can address what's going on today. You already talked about the job market, and were those jobless claims, or just or was that another figure that was just job growth, right? Good jobs report, not joblessness, right?
Well, it is, for those people that are not familiar with it, and here, maybe we should show you over here. You can always just pull up the sort of economic calendar, and this is actually a pretty big event for econs. Here's Friday. I mean, you can see how much economic data hit the market today. And buried in here, of course, we have the non-farm payrolls report. That's the big government report on a monthly basis. And I think ADP came in fairly strong. I'm not quite sure if I'm showing the right screen or not. I hope I am. But ADP came in fairly strong there a few days ago, sort of suggesting that jobs numbers are pretty strong. But here's the non-farm payrolls. This is the big number that everybody in the market watches. You can see that basically we were sitting 170, 180,000, actually close to 190,000. Consensus was looking for that about 180, and it came in at 263. So a dramatically larger number than the street was expecting. But in a weird sort of way, this is what we talked about the other day. There's no way in hell the Fed's going to lower interest rates in the face of this kind of employment market. This is, oh boy, there goes Thomas.
Oops, sorry.
This is an extremely strong number. And also, too, your unemployment rate, it actually ticked down. And the sort of headline of the unemployment rate is lowest number since, Nixon was president. Oh, which is interesting coincidence.
Yeah, but let's remember that number's bullshit, right? So if you're not reporting after 6 months, they don't even consider you. So if you've been out of a job for 2 years and you keep reporting you're out of a job, you're not even included in that figure.
I'm not going to go there. All I'm going to do is just say, this is what the headline number is. And as you sort of said a moment ago, the headlines, what's the talking heads going to say? They're going to say, oh, this was the lowest unemployment rate since the early 70s. Whether you believe this number, whether you believe government statistics, I used to work with, actually, it's funny. I used to work with Dennis Gartman years and years and years and years ago. He used to put out a newsletter before he went all CNBC and all that shit. And we used to always say that you never trust these employment numbers because they are always subject to revisions. So the irony of it all is that we could actually find out next month that they're actually going to revise this 263 down a certain amount of number. So there's a big sort of political football involved in this as well. So yeah, I agree with you. And, of course, anybody who doesn't like, me personally, I'd much rather watch the charts and the spreads and stuff to tell us what's going to happen in the future rather than listening to government-produced numbers because they can be finessed. You're absolutely right. This number is probably highly finessed.
Yeah, just like GDP.
Yeah, to a certain degree, but just the simple fact of the matter is the headline number that's printed here this morning is a pretty strong number. All right, that took about 5 minutes to answer.
Well, what I want you to keep going on is you mentioned in the lounge that unemployment reports like this are generally lagging indicators for recession.
Because labor is always the last part of the cycle. The sad thing is that the Fed is most worried about inflation, and labor makes up 2/3 of the cost of doing business. So if you have a strong employment number and lots of jobs are being created, then that means that there's going to be a lot of inflationary pressures in the market. Hey, Christian, did you see Tesla yesterday? I see Christian here. Dude, I haven't seen you in a while. I hope you were able to take advantage of that. I put in a total Davo there. But we'll get to that later on. The point is that the Fed is, of course, most concerned with inflation and maximizing employment, blah, 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 blah. So if employment is really strong, then there's no way that they can lower interest rates. If anything, they're going to have to be raising interest rates. And of course, we know when they raise interest rates, crazy things like yield curve inversions start happening. And that, of course, generates recession in the financial services industry to try and slow down that labor situation so it doesn't get out of control. So yeah, definitely. When you see that, and this is the worst part about our society, right? Is that they often say good news for Main Street is often bad news for Wall Street. And then the other way around, bad news for Main Street is often good news for Wall Street because bad news for Main Street, lots of people being unemployed, blah, 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 blah. Fed is going to cut interest rates, which usually puts a bottom in the stock market, and the market can start climbing higher again. Does that make sense?
Hmm.
Did that answer your question?
It did.
Okay, cool. I mean, am I a doctor in economics and can break down all the specific ratios and numbers for you? No. But generally speaking, the long and short of it is employment is always a lagging indicator. It's the jobs in Joe Sixpack always feel the best right at the very end of the cycle. And if anything, that's a bad sign. And of course, what do they do with all that money that they feel good about? They often go in and chase stocks at the top of the cycle, and then the market breaks, and then they go, "Hey, this whole thing is fixed. It's all a scam, right?" So say, Fed cuts rates after the market crashes, in go the institutions, buy the stock market. You could argue that really the stock market went on sale for 2008, 2009, 2010. You couldn't give stocks away then. And that's probably when the institutions were all loading up. And, here we are heading into the top of the cycle. So it shouldn't surprise us that Joe Sixpack's feeling a little bit better, feeling a little more confident in themselves. And so this is like a classic distribution phase. The question I have here, and this is this whole sort of 87 scenario, is do we head into some sort of melt up? Because usually the end of economic cycles, there's some sort of euphoric bubble somewhere in the stock market.
I think I found it.
You found it? It's just it's in food.
Yeah. How'd you know?
Fake meat.
Exactly.
And if anything, that's almost perfect for this generation, right? That's almost like Ubers, fake meat. We're all going to be eating insects soon. We should be buying avocado toast futures.
The avocado has been going up.
There you go.
You're onto something.
Talking about, hey, I got to get into the avocado business, man.
Move to Mexico. Maybe you should do that over your next 2 weeks. Start training as an avocado farmer.
That's not a bad idea. One of our guys who just made an absolute killing on that last, on the crazy ass Bitcoin bubble. He actually just went and bought like a place down in Mexico. So it's not such a bad idea. He's really big on mezcal though. And he has like 20 different flavors of mezcal. I mean, this guy's hardcore. So if anything, he'd be getting into the agave business. All right. I don't know whether you guys know what agave is.
Yeah, sure. Oh, that's Vancouver, Adam. Yeah, he's got quite the collection.
Oh man, remember we spent a night there at his place? Man, what a sweet
that was fun. We got pretty messed up that night.
Oh, did we? And he did it to us again about a couple of weeks ago. Oh man. I'm sitting there trying to have a call with Reza to talk business, and I'm just like fucking totally bombed. But it was good because I was able to get Sjord and Reza to talk, and almost just listening to the two computers interact, it was just almost mesmerizing. But anyway, I digress.
All right, so let's
the market here.
Yeah, let's finish up a couple.
Speak of the devil. Yeah, and I got to tell you guys, Reza's course looks pretty damn good. This is some pretty good stuff that he's put together.
Cool. That's something I'll subscribe to.
All right, so where do you want to take us next?
Well, speaking of, you were just talking about old grumpy men when you were talking about Gartman, so why not bring up Mr. I Hate Bitcoin and how he's buying Amazon stock. And if there's anything about following the money, I think he's very famous for making good calls and buying value. And Amazon in a sea of boring names that really aren't growing, like what's the hot stock right now. I think he's trying to funnel into something that may be the next hot thing, and that's Amazon. And it has been for a while. It's just kind of stalled out here.
I feel like he's coming to the party a little late.
He might be. I mean, from a technical basis, he's not really a technical analyst. He's more of a guy that'll be like, well, you know, it looks like value. I'm going to buy it. And, you know, whatever the market gods have blessed Warren Buffett with their power, whatever he seems to buy, it's like giving the people the seal of approval. So I think this will be a big driver for this thing. But, you know, if this article came out now, you really have to ask yourself, when was this guy actually buying, and how long did they wait to break this news? And I would argue it probably happened down in this area. You know, if he's buying up here, I think he's a bit nutty. I would believe that this was purposely broken here. Maybe it's to dump a little bit off into the retail public and reacquire as this thing comes back down. Because, I mean, if you look at these technicals on the internals, I mean, Willie's been overbought and arguably pretty embedded, probably, I guess not arguably, for, I guess, the better part of a month now. And if you look at this thing just kind of trying to break higher and higher, it can take a fib from the high to the low. I would guess we're probably close to 88.6 at this point. So that's probably your last stand for this name here. And yeah, we're just coming into 88.6. So you've got bear divergences working. You've got Willie in overbought conditions. I mean, do you really want to be buying this thing here? I personally would not. Their earnings came in, you know, way better than expected. But I mean, if you're a technical trader and you're not Warren Buffett, I can't make a case to be buying this thing just yet.
What I don't understand is that Buffett's mantra forever was, don't buy it unless I can understand how the business works. And I mean, I don't think anybody other than Bezos really understands all the different facets of Amazon. So it does kind of perplex me a little bit that he's gone into tech as hard as he has here, because usually he hates tech.
Yeah, someone made a comment that it wasn't him. It was, you know, someone that works for him. I mean, Berkshire Hathaway is technically his group. So
Yeah.
I assume they're not going to be buying without his blessing.
Yeah, but that Munger guy, right? Isn't that sort of his right-hand man?
Yeah.
You might have a point there. And also, too, you know, I mean, Buffett's getting pretty old. You know, how much of the day-to-day operations does he really oversee?
Well, hopefully it doesn't involve ketchup, because that's not doing too well for him.
I gotta say, though, you know, like Heinz, to me, I like this trade right here. And it was interesting reading the wires and stuff yesterday. Nobody could figure out why this stock was coming down, other than one of its peers in the space got whacked yesterday. So believe it or not, I actually really like, you know, especially if this inside bar fires here today, I really like the idea of buying calls. And actually, you know, full disclosure, this was one of our ideas coming out of the TRI-SOF meeting. You know, we're cheap asses there. So we're still, even with yesterday's down price, we still couldn't get filled on our calls that we're trying to buy. We're trying to buy the January 45s at 25 cents. So we'll see how it goes. You know, hopefully we can sneak in there and get a fill. But I really don't mind that idea at all. You know, and also, you know, I see you have that ASNA on your screen. That was another one that we, you know, I actually went and pulled the trigger yesterday on this. I really like this W that's coming in here.
Yeah, that looks nice. Yeah, why not?
The old CEO told him to get lost. And as well, I think I showed you that Sonos is actually setting up a nice little bull flag, so we might see a nice little pop there too. So you know, I did see, like I said, oh Jesus, it's taken off now. Well, it's gone. Anyway, you can see the little double bottom that came in. Nice railroad tracks yesterday, so that's good.
Yeah.
But anyway, like I said, I'm actually a bit surprised at how strong the market is actually here. So yeah, looks like there's a little bit left in the gas tank.
You know, What was your impression of the Fed minutes, or sorry, the Fed meeting? Would you consider what he said hawkish or dovish? I don't mean to put you on the spot if you don't want to answer.
I think he's learning that he actually has to try and say less than say more. I think the impression that I got was ambiguous, and that's actually what I would like to hear from him is ambiguity. Is that such a word? I think that's a word.
Yeah, sure, of course.
Where he's going, and he should say, where we're data dependent. I got the impression that the market was hoping that he was going to come out and be very dovish and say that the econs and the global economic situation have put us on pause, and should the circumstances warrant, we're ready to provide liquidity, i.e. cut interest rates, should that be needed. And he didn't give the market that. And I think that's what the market really wanted to hear. And that's why when they didn't get that, and he sort of said, well, the inflation pressures are quote unquote transitory, i.e. short-term in nature. And really, one might argue that, the stock market's incredible volatility over the past 4 or 5 months is that sort of transitory comment. And ultimately, really, the bottom line here, I think, is what do energy prices do? If energy prices top out and start rolling over, then I think the Fed's got wiggle room. If energy prices, especially in the face of a very strong jobs market, if energy prices, continue to ramp up, then they may actually have to be aggressively raising interest rates. And as you can see off of Thomas's chart, the energy stocks themselves have come off here a bit. So my hunch is until that thing actually ems out and we actually start trending down, I think the Fed's sort of like, well, you know what? We can't be like, hunky dory. We'll cut interest rates, because if this thing takes off and it starts making new highs, and we have a strong jobs market, oh my goodness, this could turn into like a hyperinflation scenario.
Yeah. So I guess to summarize, you would probably categorize what he said as hawkish then.
Right now technically they're neutral, and so the question is, what's the lean? I wouldn't necessarily say he was hawkish, but leaning towards, hey, we may not be done here yet.
Yeah, I think that's how the market interpreted it as well as those hedge fund guys that I listened to. They were also saying kind of the same, almost exactly what you were saying, and digesting what happened. And that's really interesting, because I think the market is kind of exhausting its trust in what he says. I think he totally lost that in January. And really, with that kind of tone, I was a little surprised to see the market continue to rally off of that. If the market took its cue from what he said directly, I really don't think we'd be seeing sort of the run that we're seeing today. I mean, sure, we got that sell-off Wednesday and Thursday, but today, I mean, you can see the Dow's up 200 points, the S&P's up, both of these two are up almost 1%. Is this just a direct consequence of the jobs report? Probably. I think that, taking the day off from not trading on a Fed day is just like, screw the first hour. I don't want to be participating the whole day at this point, because you've just got a guy who wants to say as little as possible in a market that really wants to know what direction is the Fed really thinking, and do we believe it? And I think you're at a really difficult time in a market when it doesn't believe what a Fed chairman says. It's a very dangerous paradigm to be living in and trading in, rather. And
I mean, your Dow there, can you zoom in on current price action? That to me looks like a double top.
Yeah, there's no doubt that this is a market structure top with a candle body close below the neckline.
Right.
It
I
looks
mean,
like,
if anything, I think that the market's got the wind in its face right now. My question would be, the market was pretty down yesterday, so probably a lot of people bought put options. So the question ultimately here is the market being encouraged up a little bit here on this options expiry Friday, to try and make sure that as many of those puts that were bought in a big panic the other day are going to expire worthless. um I don't, I would be leery about like declaring a bull market until that M on your Dow there is actually broken. You might find that, somebody sneezes over the weekend and then the market gaps lower the other direction on Monday.
yeah, I mean, there's no doubt that the new paradigm for this market is chop central, like lots of difficult
Tom
moves.
Vegas.
Yeah, it is. This is what's going to happen for the rest of the year. I don't think you're going to get really nice drops, and I think the moves upward are going to be complicated, convoluted, and difficult to trade. If you're playing options and you get your expiration in the wrong time frame, you're going to get eaten up, and it's really a gamble, I think, at this point. Yeah, if you're going to buy puts, sure, that looks really interesting. But look at all these. I mean, look at all these potential places where support could catch price. You've got this neckline here. You've got these bottoms in place here. It looks like we bounced off of this high here. I mean, really, just look left, draw a bunch of lines, and that's probably where this thing's going to stop and bounce and stop and bounce. I mean, unless something really catastrophic comes out, the way that this is going to set itself up is going to be really complicated to catch on the way down. The only
Yeah,
way.
agree with that. Pretty straightforward. And also, the hardest part is the fact that we're so late in the cycle.
Yeah, that's
So, we got my hunch is that they work the market higher, then there's some big horrific dump, and we actually dump right into those January lows. That wouldn't surprise me at all. That's pretty much how 87 went. And the irony of it all is that I think actually in 87, the market actually finished up on the year. So, like it doesn't show there. Well, actually, I guess it does to a certain degree. Down at 250 area, basically the bottom of value, I see a cheeky little gap. I could very easily see them just sort of, jawbone this market higher here for the next few months. And then into September, October, there's some big, climactic dump. Everybody in the public calls it a crash. And yet all they do is they just come back and fill in some of these gaps to the downside. That wouldn't
yeah,
surprise me one bit.
yeah, that makes sense too.
Like a lot of these little stocks that are breaking out for us and stuff like that. If you happen to play the stock market, take advantage of this window, right? There's still, well, look at Russell 2000s trying to break out to new highs here, right?
Yeah,
So, take advantage of this market. That little, that I think I got off crazy there, but this little RUBI that we were talking about, this bullish setup that came in here. If you play the stock market, take advantage of this stuff now. I'll just leave it at that. Just try and take advantage of this market while it's frothy. Once it actually breaks and we go into recession, then everything changes. And actually, you guys through the crypto winter, so you know exactly what markets look like when they break. So yeah, and actually that might be a good dovetail. Long and short of it here, if you play the stock market, just keep hunting those setups. If the bullish setups come in, rock on. If you get stopped out, well, shit happens. If you I do like the idea of continuing to hunt for the put ideas in the stock market. That tweet that I put out there yesterday, here we are into May now. Let's keep a close eye on, well-defined M's, bearish divergences, 50% levels a long way away, all that kind of talk. But don't be shocked if this is like a rolling top that takes a little time to develop. That wouldn't surprise me. And frankly speaking, like I said, I mean, I don't have a breakout in the market just yet. It looks to me like, and it's interesting you had the Russell on there. Looks like the Russell's trying to break out. Looks like the Nasdaq's back up against the old highs. I won't believe that this is a rip-roaring bull until your Dow breaks that M up top there.
Yeah, the other problem that I have that I've seen mentioned a lot is that is the market really going to give a whole bunch of us traders this clean double top to dump the market down? I think that's hard to believe, and a lot of the other guys are thinking the same way. You know, all the pro traders, they're just like, well, are they going to give this double top signal to all the amateur guys that are brand new to trading? And it's like, oh, look, I'm so good at trading. I shorted the double top and I made all this money. Those guys find it hard to believe. I mean, I also find it hard to believe they're going to give us this good, nice, clean top to work with without kind of popping the top across the Nasdaq.
If you can zoom back to last summer, like
Nasdaq?
just keep the S&P on there.
Sure.
What was really interesting about last summer, now, do you see the double top, the M top there that came in last summer? I guess
they gave it to us.
Right? But the really interesting thing about that, of course, is look how many head fakes there were along the way.
Yeah.
So at some point, everybody stops going, oh, fucking shut up, Brian, about shorting the market. But eventually the M does come in. What I found fascinating, and I remember specifically because we were hunting NVIDIA short ideas. And I talked about NVIDIA just being so ridiculously overbought. It needed to correct. And when I talk that way, everybody was like, you're an idiot, Brian. You don't know what you're talking about, right? And when I talk about shorting the stock market right now, I don't hear that rhetoric. I hear people saying, yeah, you're probably right. Yeah, this is, here we are. We're going to top out. All right, we're going to make a pile of money shorting the market. So if anything, this is almost like that quantitative sort of analysis where this sort of sentiment that I'm hearing out is that too many people, like you just said a moment ago, too many new people to the market are looking for a top here. And so as a result, the big boys are probably not going to break the market here. So that's an excellent observation on your part.
Yeah, I think it's going to be an interesting ride nonetheless. And the fact that everybody is really, I'm just restating what you said. It does shock me that everyone's like, yeah, this looks like a good short. I mean, this thing could just continue to melt up. And just remember, everyone else knows the mantra, sell in May and walk away. I mean, how long is that really going to continue to play out? It's hard, you kind of learn all of these mantras and they end up coming true most of the time. But when you actually end up taking a position, you're like, oh, it's May, I've got a double top, I got my div, I got all my reasons, and then this thing just continues to head.
I guess on the Dow we had a double top. Like on the S&Ps we had this key reversal.
Right.
But I don't think we're actually double top-ish yet. And as I said before, I mean, we have not broken that top yet. You could very easily see that they park the market here because of options expiry. Then the market rolls over, Monday. So,
yeah, I mean,
so if you look at it on a weekly basis, this is just turning into nothing more than just a hammer.
Mm-hmm.
Yeah.
Interesting.
And actually, what I see on that weekly chart, which kind of shocks me, is draw a ray from the rally peak in March back down to the lows. Yeah, there to there. And then replicate that. I guess you got to get rid of the trend, the extended part of it. And I think we did this on the Dow a while ago, eh? Yeah, and then do that off of the low of that big red candle. I mean, there is a real potential that the stock market melts up here. So get ready, folks. This could be a wild ride.
Yeah. It's always going to be a difficult trade, no matter what way you're looking at the market.
To draw a trend line off of that peak from, I guess it's last February, maybe. Can you zoom out a little bit there? Yeah. What's that peak? Yeah, right over there. I guess that's last January of 2018. So draw a trend line off of that peak to the next peak. September, all the way out into September. Yeah, and extend that out into the future. So that's probably going to tell us some major resistance levels.
Cool idea.
So, and what point does that line intersect with your with that AB equals CD level? You're going to have to really zoom out. It might not be for a good year. Yeah, do an extension off of that range too. That would be interesting. Again, yeah. Okay, do this, do that, do that. Okay, go over there, then do that.
I got it. This thing's just being a little stubborn here. There we go.
Yeah, so if you could zoom out, and you might have to zoom way out, where does that horizontal, that trend line, where does that actually intersect with the AB equals CD objective?
Looks like six.
Looks like into next spring, eh?
Yeah.
Well, we'll see what happens. I mean, maybe we just melt up here, but I think if anything, and maybe this year's different. And Brian's taking a vacation. I mean, what the fuck? When was the last time Brian actually had a vacation? I can't even remember the last time I had a vacation.
Summer of last year.
No, that was business. That wasn't a vacation.
Oh, baloney, mister. I'm in the streets until 5 a.m.
Wait, yeah, that's fine, but I couldn't take my pants off and run around naked.
I feel like I heard that you almost did.
I have to, that was work. Trust me. I mean, I had flights to catch, I had appointments, I had meetups to do. I mean, it was work. It wasn't a vacation, right, where I could just disconnect. But anyway, that's here nor there. The point is that I've been actually thinking for crypto to dump into my birthday. Maybe the fact that I'm taking a vacation this year, maybe the whole market continues to melt up right through the month of May. Who fucking knows? I don't know.
Yeah.
And if anything, you know what? This is a really good lesson for all of you. It doesn't matter who the fuck you are. Your opinion doesn't mean jack shit. It doesn't. It really doesn't. The market's going to do any old fucking thing it wants. And it doesn't matter what your opinion is, because the market often will make a fool of you. So just trade your goddamn setups, right?
Well, now we have a title for this episode.
All right. Look at that Joby gap. Fuck me.
I was so close to buying calls after I sold my puts, or I guess I bought back my puts, and I actually did want to buy calls, and I didn't do it because the next day this thing continued to move down, and I was kind of away a bit yesterday. But it's hard to buy these things, right? Silver is a very difficult thing to trade, like I said on Wednesday, but I did abandon ship on the position as it was going down here, so I made a bunch of money on my puts that I've been holding since February. But I seem to be in the right time frame for these kind of things. And I really wanted to buy here. But the question everyone needs to ask themselves again is, if silver is rallying here and bouncing off of these bottoms, I mean, it almost got right into my, I like to bottom end of this green box. Like usually we would draw the green box from 61.8 to 78.6. I liked it a bit lower just because of a few targets. And we got really damn close to hitting the thing. But we kind of backed off a bit. A lot of the schmucks on Twitter were all talking about going long silver in this area. And whenever you see that kind of stuff, there's always one more flush. And I think that this may be the beginnings of a counter trend rally. I really like to see rallies up into like the 14 and a quarter to 14.50 range. That looks very possible. But if that does happen, what the hell's going on with the dollar? Because that means the dollar is going to need to eat some lunch here. And that means someone's going to need to eat the dollar's lunch. And to me, this thing looks like it's on the verge of topping out. This does not look very healthy to me. But again, it's Friday. This is 2 days after a Fed meeting in the face of a jobs report that was really good. I'm not really sure what to make of this just yet, but I'm starting to lean toward maybe the dollar needs to go back down into its range and kind of everyone was getting rah bull the dollar as this thing was breaking out. And in here, nobody gave a shit about the dollar. And once this thing broke out, then you have like I guess she's my girlfriend, Juliet DeClerc, who like 2 years ago is talking about how she's a dollar bear and the euro's going to 1.20 and da 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 da. And then of course she comes out yesterday and she's like, oh, I'm a dollar bull. I think the dollar is going to go higher. And I heard that this morning. I'm like, oh, fuck. And I couldn't believe what I was hearing because, for whatever reason, these Macro Voices guys idolize her. And I think she's very smart. I think she takes a really interesting, unique approach to the markets. But I have found her analysis for the long term on these pairs has not been so great. And I hear about what her product costs, and people are paying like 40 to 50 grand a year for this thing. I'm just like, fuck, if you actually paid for that and you took this pairs trade, long euro, short dollar, I think you probably got your ass handed to you because the dollar didn't quite, the euro never got quite back to that 120 area. And I mean, it got close in 2016, but I'm pretty sure, or 2018, pretty sure this was like this time last year. She's talking about the euro rallying to some crazy highs. But regardless, it scares me to hear her say that. And I mean, a lot of other people are thinking dollar's broken out, dollar's going higher. I don't think the Fed's hawkish tone here is helping it as much as it could. Or, well, I guess it did actually over the last 2 days.
The thing, I'll have to say, I didn't hear hawkish. What I heard was ambiguous. And if they're they're leaning towards hawkishness, but I didn't hear hawkishness.
All right, let's call it a whisper of hawkishness. How's that sound?
All right. I mean, us technicians, we should look at this and say, okay, I see W's. It looks like this thing's breaking out, but can I buy up top here? And, is there some sort of magical zone that if I did want to buy the US dollar, where should I be thinking about? Reload zone. Reload zone.
Yeah, totally. Look where that 200 period moving average and how that's played into this market.
I see a very pretty little trend line that seems to be sitting right in that reload zone. I see the 200 period moving average sitting right in that reload zone. And we know as technicians, we're supposed to buy down markets and sell up markets. So, we don't have it. I mean, this is like going and shorting gold down here.
Which Eric Townsend wanted to do. He's like, oh, I think gold's going straight down to 1,230, maybe $1,000. And I'm just like, oh, no.
Is it a good idea to put a new short on here?
He did.
That's the problem, right?
Yeah, it's the contrarian Eric Townsend indicator with Juliet DeClerc mixed in, and you get a pretty good counter trend bias based on what they're thinking.
I would say, check this out, right? If you do a fib off of your gold chart there and just draw it back up to the old highs, and then you do like reload zones and then draw horizontal support and resistance lines off of the peak from January and the peak from the middle of March. My hunch is that if you wanted to short gold, that's the location where you want to be short from, not down here.
Yeah, totally. So we're 50 minutes past. We've done a lot of market yip, yap, yap. Should we?
Head on over to crypto.
Yeah, I guess we better get that ship sailing because there's a lot of shit to talk about there.
Just before we turn you loose, I was quite surprised. Sin helped me immensely fix this algo and get it sort of signaling correctly. And actually, it's interesting because Bitcoin's so schizophrenic. It's got so many different markets that it follows. I was quite surprised to actually see that the algo fired our fours, which is buy signal, on MEX, on Stamp. Stamp one, it was a bit wishy-washy. But look at like things like OKCoin. Look at this signal. I mean, it has just been that whole move. And then what I find really cool is look at the CME signal here. I mean, it's just, I'm a 4, fuck you, get out of my way. I mean, I gotta say, man, I'm stunned. I really did not expect to see this happen. But again, put your damn opinions away and just trade the levels and trade your signals and trade your setups. And wow. But I gotta say, for the record, I'm actually a little surprised that Bitcoin popped as hard as it did. But nonetheless,
let's try to talk about why that is. Why would Bitcoin pop to where
somebody must have sneezed somewhere, right?
Well, I think we have to entertain the idea that for a while, Phoenix had a really big premium over spot. And maybe that was because, and I think it was because there wasn't a way of taking your funds out for a few days, which is reportedly what was going on.
Yeah, where did you hear that? Because I was trying to search like withdrawal times of Phoenix, and I didn't find anything. And it doesn't seem to be a lot of panicked guys who can't withdraw their funds on Phoenix. So,
I mean, that's what was confusing me, because I saw reports that you couldn't arbitrage, and then I saw reports of people saying, yeah, I can withdraw my funds. So I don't know if this was like a Tether issue, if this was a Bitcoin itself issue. I couldn't narrow that down as well. But
because that's crazy. I mean, if you could arbitrage, there's no way that people wouldn't jump on that $350 spread, right?
Exactly. So you have to assume that there was some issue getting money out, whether, however that may have been, right?
Yeah, but it still has to be persisting, right? Because otherwise the premium would just vanish.
Yeah, so I guess the premium $6,000, or Finex right now is $6,000. OKX is $5,600. Coinbase is $5,700. So there is still, 300.
Yeah, nothing's really changed premium-wise. So
yeah, I guess this kind of I mean, I was thinking there must be a reason for this. Maybe people were trying to take their coins off of Finex, or send them out of Finex through converting them to something else and then selling them on the other exchanges. But that was one of the, I saw three different articles saying that they believe the rise in this was attributable to the arbitrage opportunity. But I mean, now that I'm looking at the pricing, I don't see that. I don't see the reason for the price to rise because of people taking money out of Finex and buying it on the other exchange, or selling it, or buying it on the other exchanges, sending it to Finex, and then selling it, because then you would see a depression in the price on Finex, and we don't really see that. You see the same run up that happened, albeit slightly later, I think. Is this right? So 2 o'clock in the morning, price had really broken out here. And then on OKX at 2 o'clock in the morning, yeah, I guess this is kind of similar, but it looks like OKX broke a bit earlier than Finex. I don't really understand this, Alex. There's something really fucked up going on.
I did a study on. I mean, I can present something on Monday if you want to. I guess.
Yeah, that'd be cool.
If anything, while I'm gone too, see if you can get Sneak Rizza into this conversation, because he's staying in the lounge here. The what are you saying here, Rizza? I must show you guys also inverse spreads here, and they're in the combined order books. Well, that's all good. Maybe we were going to have dinner tonight or tomorrow, Rizza. Maybe we can look at it then. But if anything, I think Rizza, because Rizza does a lot of this sort of deep pool kind of research.
Yeah.
I think you should really try and sneak Rizza into one of these DBs and just pick his brain.
I mean, all I can say is that this reminds me a lot of 2017 when Bitfinex couldn't do banking because they lost their Wells Fargo partnership, I guess. And you really couldn't withdraw funds, and you had this huge premium of, I think, up to 9%. Because as soon as you could arbitrage here, this premium would just vanish, right? It's not just Joe Sixpack doing arbitrage there. There's people with incredibly big pockets that would just dump on Finex and buy on Stamp, I guess.
So what would you hypothesize would be the reason for this big premium?
I think you can't withdraw funds, because otherwise it doesn't make sense. But on the same time, I never read anywhere that you couldn't, right?
Yeah, no, it makes sense.
You guys don't buy the argument that people on Phoenix that are long a shitload of Tether are just bidding up the price of Bitcoin to get out of the tethers?
Well, BTC USD is not Tether. Yeah. I mean, still, there's a spread of like $350, right? People could just instantly arbitrage that. Arbitrage opportunities normally they don't last for like days on end, right?
Yeah. It's definitely a conundrum. If anybody can figure this out, please, feel free to add to the conversation. I will, the only thing I'll just sort of add is it looks to me like OKCoin. I love to follow these spreads because I think they're such a great leading indicator. But something changed in the market. It looks like at about 5 o'clock my time yesterday, which was sort of the beginning of Asian trading. Might be interesting to take a look at the Bitcoin Flyer, because Phoenix and Bitcoin Flyer actually I found move quite closely. So maybe why don't we just take a quick boo at Flyer and see what the hell Japan's up to these days. So here is Bitcoin Flyer over on in Japan. And yeah, isn't that interesting? So you can see that Phoenix and Flyers charts are almost identical. I don't know whether you guys can see that.
Yeah, I think most spot charts are very similar, except for Phoenix and Tether charts.
Well, that's the thing, right? Flyer here, or Phoenix, I found, just me personally, I found Phoenix and Flyer almost move in lockstep.
So I just read that that people have no problem withdrawing fiat and Tether out of Phoenix.
That is insane. That is insane, because that means that the buying pressure on Bitcoin, although you can arbitrage, is so high that you actually have a $350 premium on there. I mean, that's insane.
Insane in the membrane. Brian's going on a vacation. That's insane too.
So I read that somebody was able to do just a $3,000 Tether withdrawal without a problem, and it must be like the limit must be higher than that. Maybe they won't let you withdraw more than 10 grand or something.
Yeah, but that's still kind of crazy, right? Because I mean, everybody and their brother could be just pocketing money there.
Yeah. Oh, wait. So there's a 3% fiat withdrawal fee right now. So maybe that's what this is about. So people are keeping their money on there because they don't want to pay the withdrawal fee to do the ARB. So 3%. What's the premium? Is the premium?
You would still do like 1.5% on that, because it's 4.5% last time I checked. But we can.
Is it? So yeah, let's see. So right now it's 6,040, and Coinbase is what? 5,700. So 5,700 divided by 60/40. So it's about a 5.7% premium.
Yeah.
So you get 2.7 after the withdrawal fees. That's interesting.
I mean,
does the bank charge like a 1% fee or anything?
Well, there's also a 0.2% fee for every trade.
Okay.
But that's still not enough to make this not worth it.
Well, and then also too, I mean, there's a bit of uncertainty around this, so I can understand, like, I think it was James put out that video by Chico Dude. I don't know whether you saw that on the Twitter feed. I retweeted that. I mean, if you listen to this guy, he's like, this is an absolute train wreck. So, if you watch this kind of video, you would, if you watched and you listened to it,
yeah,
you would think that Phoenix was about to go under. So, there's still probably this floating around there. Thank you for retweeting that, James. I totally appreciate that. So I don't know. Yeah, it's a debate. There's obviously some shenanigans. It'd be interesting to see, it would take a bit of work, but to calculate sort of like what the difference in yen versus Phoenix in US dollars. I wonder if Phoenix actually quotes Bitcoin in yen. That might be an interesting chart to look at. So,
Yeah, I'm seeing that the withdrawal fee isn't hitting anyone until 1 to 2 fiat withdrawals in a 30-day period. And then there may be an issue with sizable withdrawals of big money. So that's all I got.
Okay. So, we're actually past the top of the hour. I do have to teach a class here, so we are going to have to sort of wind this up. As for trade levels, are you doing anything in the market here, Thomas?
I am actually not in a position right now, and I got stopped out on a short the other day. But I think on Wednesday I left and I was like, I don't really see this thing dumping. And I said it had like the hallmarks of a bull. And, looking at it Wednesday night and Thursday, I was like, I don't know what's going on here. It didn't look like it wanted to dump. And then you looked at, I was trading Ethereum primarily, and Ethereum just tested the 38.2, kind of bounced off of it a few times. And I remember looking at it last night and I was like, boy, this sure looks bullish. The thing just wouldn't go below 157 on Ethereum. And sure enough, I woke up this morning and the thing had already taken off. But I mean, was there an easy way of trading this? It was kind of an elongated move, right? So if you're in a leveraged position and you take profits kind of in this area and then it backs off, you're kind of like, what's going on here? But then when you actually get the bigger picture, this thing was just Wing off that 38.2 level. And now we're firmly above the 200 period moving average. So where do you take your positions, or where do you take your potential targets? I think that's really difficult because there's a bunch of different ABCDs. You can see we're punching up against 61.8. The original breakdown on the 4 hour is at the neckline. But is this thing a slam dunk short? I would argue the answer is no. I think that if we see continued strength out of the next 4 hour candle, this is going to invalidate this 4 hour bear div that's only going to keep this elongate. Well, this would have to break to new highs to put in a new div. Willie's not quite overbought, so I think there's still more room to the upside. Now, the question is, why would Ethereum have more upside? And the question also is, why would Bitcoin have more upside? Well, we have no idea what's going on with the Phoenix issues. There may be some issue with banks and people aren't able to arbitrage the price back down. Something fucked up's going on with Tether. There's no doubt about that. But I think what I can narrow down is what would happen to Ethereum. And that's based on a couple of articles that I pulled out about proof of stake is coming to Ethereum. Now, is that bullish or bearish? I think that all depends on how this all resolves itself and what code actually gets implemented. But it turns out that the sort of third stage, if you will, of this Ethereum network upgrade, we had Constantinople, and then I think in the end of June is the goal that they want to launch they want to finalize the code for what they're calling Ethereum 2.0, and that's going to be the proof of stake algorithm based on Casper. And that in of itself is going to change the whole dynamics for how Ethereum is valued, right? So they wanted to change, for example, that the minimum stake in Ethereum, I think, was like 1,000 ETH, but then they went and evaluated it and they're like, well, maybe we want to keep it at a lower level so we don't get centralization. And they decided to lower it down to 37 Ethereum, which is like $4,000 equivalent, in order to vote on network changes. This is an evolving process. There's a lot of moving parts to this. I suggest that you read these two articles. I'm going to put them in the lounge because I could probably talk about this for another 30 minutes. But the only other thing that I want to talk about and cover with regard to this is that the way that they're going to compensate people for staking their Ethereum positions is through interest. And initially, they thought they were going to pay an interest of 2.2%, which I believe is per coin. And they realized that's probably not enough money for people to be interested. So right now, the current thinking is they're going to boost that to about 3-ish%. Sorry, it was 32 Ethereum, not 37 Ethereum. And they want to raise that to 3.3%. Based on an overall amount of 30 million Ethereum staked on the network. So this is big, right? For this change to be implemented and for all this to go smoothly, I would be shocked if it all comes into play in the timeline that they'd want it to. Sure, the code could be ready in June, But just like with Constantinople, when they had everything ready and, some company was like, hey, wait a second, guys, there's a big security flaw. We got to hold off here. I would imagine the same thing to go through with this. There are difficulties with what they're doing that include issues with scalability, security, and making sure that all this shit comes together properly. And it's, again, a lot of moving parts, but it is a transition from one of these big name coins moving from proof of work to proof of stake. And I think the markets are trying to figure out how to value that into the current price. I mean, is that what's driving price right now? Probably not. But it's on everyone's mind at this point now that these news articles are hitting the wires, now that the proposed implementation and finalization of the Ethereum 2.0 code starts coming in. More and more people are going to be like, well, what the fuck is an Ethereum really worth then if it's no longer proof of stake and it moves to proof of work? Because currently proof of work generates about 160 million. I think I got that right. If I'm based on even staked. Well, nope, that's wrong. But I think what they found out is that proof of stake would end up yielding about 2x more funds into the Ethereum network than proof of work would. So if that's true, then you're going to see this thing. I think that would eventually dilute the price of these things. And then there's also there's a lot of moving parts. I guess I don't understand it completely because this is still unfolding. But I think it might have to do with a halvening or a thirdening of Ethereum combined with increasing the proof of stake and the amount of coins available. But nonetheless, if we can figure out how this is going to implement and how it could potentially impact the price, you could get a really nice tell way, way further ahead before this thing goes live, and get a better accurate evaluation of what the price should be going into that event. So that was a mouthful. I hope I explained that right, but it's really important fundamental driver for Ethereum over the next, I guess it's month and a half to 2 to 3 months, depending on when they implement the code. So keep your eyes peeled for that. And then the last piece of news that I just wanted to cover is that Facebook is reported to be looking for about $1 billion and being funded by Visa and MasterCard. So this coin may actually be more than just a rumor. And more interestingly, Mr. Tim Draper is also interested in taking a stake in this idea as well. So if that doesn't mean this thing is real, I don't think anything does. So Tim Draper looking to get into this rumored or not so rumored Facebook coin. And then, there's one more thing which I think is ridiculous, but may actually be something interesting to watch. And that is some jerk started some website, says he's going to start a countdown timer because he will unveil the true Satoshi Nakamoto, or the true father of Bitcoin. Who the hell this guy is starting the site, we don't know. McAfee claims that he knows who Satoshi is personally, and that the white paper was written by Satoshi, who lives in the United States. I don't believe a word that Mr. McAfee says, unfortunately. But, does this guy actually know who Satoshi is? Well, the countdown is 11 days, 3 hours, and whatever minutes it is until that happens. The website is gotsatoshi.com. I may have inadvertently advertised someone's bullshit here, so click that link at your own risk. And, is this even a real thing? Maybe this is like a Craig Wright, like, oh, get surprised, I'm Satoshi. And everyone's like, oh, you again. No, there's that. And I think that's as far as the important news that I could find here. And then again, the other thing as far as trading goes, we're going into the weekend. Shit's going to get real wonky now, especially if, this Finex premium still exists and this potential arbitrage opportunity is still up in the air without banking online and without the ability to move fiat. If they are, capitalizing on the small arbitrage amount that they could take advantage of, if this fee is playing into account, I imagine that's going to get a little bit higher as the banks are turned off and the ability to move fiat is reduced over the weekend. That could impact price to the upside. But I don't know, right? I'm hands off right now. I think especially this weekend is going to be really messed up trading. But as far as how this is setting up, again, same thought. I still think we're poised bullishly. We're getting closer to the end of the move on Bitcoin on the 4 hour, but wait for your setups, right? There's no reason for this thing to dump all the way down. on the 4-hour, the daily. Brian was talking about that bearish divergence that's really long here. I'm just wondering if we really do actually need to go up and touch 6,000 across all the other exchanges before this thing really does come off. So if you're still in a bullish position, congratulations.
For whatever it's worth, I like the idea of us heading into the weekend, kind of like you see over here. Rally the market up and then a bit of a pause. Remember our market symmetry study? It's interesting how this rally peak came basically exactly when this spike was supposed to happen here. No, we didn't stop at the gap here, but be careful, guys. The other side of this market symmetry study showed a correction. I think just like what Thomas said, I don't think that this is this is high leverage, high octane shorting here. So be careful if you are so inclined. But probably just on first blush, and this is just looking at the CME contract, right? We probably should be thinking just in the short term 38.2s. So this CME contract sitting at 5,700, that's at like 54.68 kind of area. That would probably be a logical place for us to maybe back up to. Just in the short term. But yeah, I'm actually starting to get some sort of, like on all of these, right? Inside bar fail, no inside bar fail there. But 3 out of 4 of these inside bar fail. And these are 4-hour charts. So yeah, please, heaven forsake people, don't chase up top here. Sorry, didn't mean to interrupt, but I thought that was pretty important to say.
I think that was the perfect ending to this long-winded equity daily brief with a little crypto sprinkled in at the end.
Okay. All right, everybody. Just an FYI, banging out doubles. Our little options club actually did just book a double on the IDRA this morning. So thank you for reporting that, Zach. It turns out that actually this little trading model is working nicely. So thank you for that report, Zach. Totally appreciate that. And if anything, like I said before, we might just roll over here. We haven't broken out until we actually break out. So, just, slow and steady. Don't chase. No FOMO allowed here at TRI. If you do want to get in on the bull on Bitcoin, my hunch is you got to wait for some sort of consolidation here. And if anything, maybe it makes sense that into that sort of birthday window that I always talk about, Bitcoin soft, maybe that's what has to happen here for a nice consolidation here to set up the next move. So no chasing allowed here, people. Please, no, do not chase. Hunt those setups. And the interesting thing is, like, we haven't really talked too much about it on the site too much of late, but some of these altcoins are looking really, really attractive down here. Here's another one. I mean, look at the money pouring into this one. So, get in there and hunt those setups. And nobody's interested in altcoins right now. So, do yourself a favor. I mean, look at these OBVs. I mean, money is pouring into these names. So, just hunt your setups and let's just, slow and steady wins the race. Okay, why don't we leave it at that for today? As I said, this is going to sort of be my last conversation with you guys for a couple weeks. So go easy on Thomas and Alex and all the wonderful contributors. The TRI team of Julian and Sjord will still be in the back office answering support and all that kind of fun stuff for you. But have a nice, safe period. And I don't want to hear about anybody getting wrecked while I'm gone. Okay, guys? All right. Any closing thoughts, or are you done for the day, Mr. Bear? Sounds like he's done. All right. So why don't we leave it at that? Mr. Mayor, do you feel like we gave these people some good value today?
Yes, sir. Have a nice vacation. And I hope you have a blast.
All right. Thank you, sir. All the best. Take it easy, everybody. I'll see the level tours in about 45 minutes. Any closing thoughts, Mr. Bear? I see you took your microphone off mute.
I just wanted to wish you a very happy birthday and have a great vacation.
Thank you, dude. Love you, babe. Love all of you guys. You guys, you're the reason why I'm here with bright-eyed, bushy-tailed every day. So you guys have yourselves a great time. All the best. And the only thing left for good old Brian to say at this point is a big bye for now.